80% of all business owners who would like to sell their business don't find a buyer. Buying a company is a great way for you to already beat the odds. We need to buy good companies run by good people. And the easiest piece is financing. Capital's everywhere.
Because there's $9 trillion sitting on the sideline right now. Welcome to episode number 10. Can you make nine figures doing this, or how to make nine figures doing this? My partner, Adam Coffey, and I, 2.46 billion in exit, myself, JT Foxx, over 70 companies and brands. And we have come together for the purpose of giving you the information of whether or not you want to scale your business fast. Number two, you want to exit. And today we're going to talk about when is the right time to exit a company. A lot of people have been sending us DMs and messages. And thirdly, do you want to be a deal maker? Do you want to put companies together, get them to $4 million in EBITDA, sell them for $32 million, get them to $10 million in EBITDA, some to over $100 million? Our videos have gone viral talking about this. And at the end of the day, we would like to do business with you. But in order to do that, please like, follow, share, subscribe. And in the bottom, there is a link there to see how you can come see us and meet with us. And the purpose of this podcast is to give the information, but to do deals. Is that correct, Adam? Is that really the purpose of this? Is really we want to do deals with people. That's first and foremost what we want to do.
It is, JT. We were thinking we've been talking about the seminars that are upcoming. We're only doing 2 seminars this year, and there's a reason for that. We're busy. We want to do deals. I'm a deal maker. It's like I want to spend my time building empires with entrepreneurs. For them, for ourselves. And a part of that is trying to educate, call it, business owners all around the globe, so that they can be successful. Whether they do it with us or don't do it with us doesn't really matter. They can do it on their own. I'm giving them the tools that they need to succeed.
Before everybody say, the cost that we came up is $198, at least in Dallas, and it's 10 minutes from Adam's house with the sole purpose of breaking even. The cost of the room, the marketing, the staff, the flights, and everything. This is not make millions of dollars now. We think that if we get people into a room, that they can power themselves to scale their business fast, because a lot of people have a great business, but they still have to get that push to scale. And then some people who want to just exit their company, but they're not going to get the price that they should or they want because they're not set up. We're going to talk about this on the show. And third one, some of you want to be a deal maker and put these deals together where you either put a bunch of companies together or you buy companies yourself and you roll them up and be a deal maker. Like this is what Adam and I do for a living, where now I've done over 1,000 real estate deals and own companies all over, where I'm reducing a lot of my time to do specifically more of what that is, because there's $9 trillion sitting on the sideline right now. And I don't see real estate, I think real estate will always be good. I just don't see the kind of returns that you can get in real estate investing in the next 5 years if I put my effort. Is it easy? No, but nothing is easy. And I think that's one thing that I've realized the world with the fires and everything that's happened. Life is hard, but you know what? We stand up, we dust ourselves back up, and we get back up and we fight for a better tomorrow. And we are resilient. People that are watching the show are resilient. And you know what? This is why we're going to do. So Adam, a lot of people will never sell their company, correct? Just not because they don't want to sell it, because their kids don't want it. There's no succession plan. And the minute they stop, they die. What percentage of businesses actually do end up selling?
There's a statistic that I read not too long ago that talked about this particular issue. And they said 80% of all business owners who would like to sell their business don't find a buyer. There's 34 million small companies in the US, just in this country. So globally, there's hundreds of millions. And there just aren't enough buyers to buy them all. Many industries have really high fragmentation. Let's use bookkeeping and accounting and payroll services companies as an example. 1.8 million of those just in the United States. So a lot of businesses are small, they're lifestyle businesses, they're not an ongoing concern. If the entrepreneur walks away, the business walks away, it folds up, it can't continue without the founder. And the biggest reason why most of these businesses don't sell is because they are a lifestyle business. And so a person didn't build it to be an independent, ongoing concern after they left. They built it to essentially just generate an income for their families. They were successful doing that for decades. As you said, kids don't want it. They're going to walk out of it. There's nobody to sell it to because there's no business when they walk out the door. They flip off the lights, they call it a day. And they just kind of wind down operations. That's 80% of business owners. You talked about the next 5 years for real estate deals. The reason why there's a lot of focus and activity on this is it's the largest wealth transfer in human history going on right now. I'm the youngest of the baby boomers. You know, I was born in 1964. And so the youngest baby boomer is 60, oldest baby boomer is 74. I think it's a 14-year period. And literally hundreds of millions of these people who are business owners are going to be exiting stage left. And so it's the largest wealth transfer in human history. And for a lot of people listening out there, buying a company is a great way for you to already beat the odds. You know, the odds are so stacked against you when you do a startup. Only 7% of companies get to $1 million in revenue, and only 40% are profitable. 60% are losing money or break even. And 65% of them will be gone like in 5 years. And so if you want to beat the odds, you can buy a business from someone who's leaving, who spent 20, 30 years building it, has a customer base, and it's like, boy, you've eliminated all the startup risk. And so different mindset, different way of thinking. You know, we talk about doing roll-ups, and I'll just tell you that, you know, in my career as a CEO, you know, I spent decades doing buy and builds, which is the art of putting a lot of little companies together to create something big. And I was doing that for Wall Street, you know, and billions of dollars in exits, not seven figures or eight figures or even nine figures. You know, we're talking 10-figure, you know, exits and multiple mid 9-figure exits. You know, this works on a very large scale for institutional investors. That's why the world of private equity has just exploded and gone from hundreds of billions in assets under management when I started working with it to more than 7 trillion today. Right this second, 1.9 trillion in powder, which is committed capital, looking for something to buy right now. And so for people who are thinking about selling, now is probably one of the best times ever. You know, since Trump won the White House, interest rates have come down. A lot of expected deal flow, you know, in 2025. Great time to be in the market as a seller or a buyer.
But there's a lot of people, there are things that they need to do in order to sell their companies. And you may be watching this saying, well, I'm not ready to sell my company now. I think, first of all, it's not when you're ready to sell your company, because the minute you say you're ready, you probably have another 2 or 3 years before that sale even happens, right? Because the first thing is, Adam, people don't set up their companies to sell. So some mistakes that may do is, number one, they don't have audited financials. Is that correct? That's a very big part that anybody comes in, because in the due diligence process, without audited financials, it's kind of a mess. Would you agree with that? That's one thing that people should all have to do.
Well, I would say not necessarily just audited financials. Their books are just a mess. You know, the books in general are a mess. They've got different, you know, chart of accounts are off. They have expenses hitting the income statement in the wrong places. When I'm a business owner, my goal and objective is not to pay taxes. And so I put all my lifestyle expenses into my business, and my goal is to lower my profit to as low as, you know, amount as possible so that I don't have to pay taxes. You know, if I'm going to sell my company and I give the crap that I use, you know, my day-to-day running my business to buyers take a look at that. They pay a multiple of earnings, a multiple of EBITDA for a business. They look at the business and they say, this business doesn't own any money. I looked at one yesterday. 10 plus million in top line revenue, it was showing less than 1% in net income, and it was showing 3% at the EBITDA line. I'm like, this is a dog with fleas. They have no future. We do a little cleanup. All of a sudden, that same business is showing about a 12% EBITDA, you know, and it's showing 8.75%.
What kind of expenses did they have? Were they writing off what their kids' salaries, their massages,
a lot of expenses that were hitting the income statement in the wrong place, you know, and so lifestyle expenses. Yeah, you know, it's all of that. You know,
what did they want? What did they want? What did they want for the company? So let's just as an example. So there's a 10 million in revenue. They're looking to sell. You're talking about what, $100,000 of profit is what they're showing. What were they asking?
That's what they're showing on 10 million of revenue. Yeah.
So what were they asking? Because usually it would be 300,000, three, maybe four on a EBITDA current, you know.
Well, in this particular case, this was a smart seller because they're not ready to sell yet. They came to me and said, you know, I'm seeking to clean up. I'm seeking to prepare. And that's the biggest key. You know, if you're going to be a seller, if you wake up today, JT, and you say, I want to sell, I want to be out in 6 months, you know, then you're stuck with your books the way that they've been reported for the last 3 years, your growth rates, whatever they are, your up and down earnings years, you know, all of that crap. I can put lipstick on a pig, but at the end of the day, it is what it is. When people come to me and say, hey, Adam, I want to sell in 2 to 3 years. I want to sell in 18 months. That's a lot of time to work with. Now we can focus on, let's dial back the onion. Let's take a look at your financial statements. Let's see how the business is performing. Let's see if we can't identify areas of opportunity that we can improve the business, change the trajectory that it's on, get it growing again, get the margins, improving. And then we've got some time now to craft the story, build that new history of earnings, and now focus on how do we put all the right pieces in place. The first thing a buyer does when they are looking at a company, so you say, I want to sell my company. My phone rang. It's a private equity guy. It's a company. It's a strategic backed by private equity, and they're looking to do a roll up, and they're interested in my company. And so they call me on the phone, and I say, sure, sounds great. I'm getting old. I'm not getting any younger. Let's do this. First thing they're going to do after we sign an NDA, is they're going to ask for 3 years of financial statements. And so if I just send them my junk, I'm asking them to tell me what I'm worth. If I'm a seller, I want to know what I'm worth. I want to go through the hassle of cleaning up my financial statements. I want to know what my adjustments and add backs are. And then I potentially want to do what's called a quality of earnings. I want to actually hire an accounting firm. And I think this is where you were going with the audited financials. And I want to hire a part of their transaction services advisory team, which does Q of E's. And I'm going to bring them in and pay them and say, I want to do a sell side Q of E. I want to know what a buyer is going to see when they scrutinize my financials. My purpose for doing that is, before I sell something, I need to understand what it's worth, from a market perspective. So before I talk to anybody, I'm cleaning up financial statements. If I've got time, I'm focused on improving operations, dialing in my story, focusing on trying to actually accelerate my organic growth rates, do all the things I can do, like I probably did many, many years ago when I was a younger person and I was aggressively trying to grow my business. I want to get back to those kind of fundamentals. I want to have a Q of E done. I want to understand what my business is worth. There's databases out there. We can look up companies, see for a certain size, certain industry, what are the typical multiples that these companies are trading for. And I want to have a really good idea before I hang up that for sale sign. I want to know what number should be on that for sale sign, and then when I'm engaging with buyers, I'm prepared. I've done the financial preparedness that I need to do from a company perspective. We didn't even get into tax, JT, but hey, if I'm going to sell my business and it's a big windfall, am I going to pay taxes on that? What's the structure I need? Do I need to set up some type of a creative trust structure, or some, ownership structure in order to maximize the potential of the windfall that's about to come to me? Do I want to stay in as an investor? Do I want to consider being a rollover investor, getting a second bite of the apple? Am I physically staying, or am I going to, try to leave? In which case, is there somebody there that can run the business when we sneak out the back door because we want to retire? There's so many things that we have to think about from a pre-sale preparedness perspective. And in getting all of that stuff dialed in, which could be done in a relatively quick period of time, especially if it's a good performing business. But essentially, the buyer is seeking to identify risk. They need to put their money to work. They want to buy companies. They're looking at yours, and they're trying to assess, is this a good company, a mediocre company, a bad company? What are the risks? And if I do the deal, how am I going to hedge against those risks? And so, a lot that goes into it from a buyer perspective. We need to be thinking about that as a seller long before we actually become a seller. And so another key question then is just, when is the right time to sell? And I tell people that, I created this thing I call the rule of 130. And so you take your age as a 2-digit number. I'm 60, so I write down 60. And then I ask myself a question: what percent of my net worth is tied up in this illiquid thing known as my company? And not many entrepreneurs, JT, over the years have diversified their holdings or their wealth. They've got all their eggs in this thing called their company. It's illiquid because it's private. And the typical answer I get when I do this analysis with people is typically it's around 80%. Around 80, 90% of my net worth is tied up in my company. I'm 60 years old. Add those two digits, two-digit numbers together. What do I get? 90 plus 60 equals 150. 80 plus 60 equals 140. If it's over 130, chances are you have way too much risk, tied up in your business, and you need to think about asset diversification and at least selling a partial, having a partial exit, even if you roll over and still run it and keep working with somebody else, but getting some chips off the table to lock it in. I could tell you so many stories about things that went south for people during COVID.
Well,
Through
we're gonna talk about that. By the way, this may be the viral clip. I could see them clipped out. That our video guy will clip that part that you said, and as you were talking, I was like, viral. Good job, Ad. Way to bring a viral clip there. But that's one of the things our company does. Obviously, on one side, we do help people who want to prepare and to sell. It's a very small part of our business because we are deal makers. But what ultimately we do in this situation is this. Number one, we can buy your company, let's say 70%. And we want you to be in there at the 30%. Then we, Adam and I, and our partners will then buy up a bunch of companies and put them into this animal for a huge exit, which one that you probably will not be able to scale yourself unless you have the capital to buy a lot of companies, have the bandwidth to understand how to merge all these companies. It's a lot of work. And not only do you get, let's say, 70% of the chips off the table, so you get some money, but you're still part of in another exit. And if you want, you can roll into another exit, the other exit. That's one of the things that we do. The second thing that we do is this. Okay, your company is whatever number, you're making $1 million a year. Let's say it's valued at 3.5, let's say, right? Well, you get to have a worth of 3.5. We partner with you. Then you and I together, and Adam, we then start buying other companies against you. And then we go for the big exit together. But you retain the value of your company as it stands today. If it appreciates the moment we get in, then also we participate in that appreciation. We go and find the companies. Together, we go and find the companies, and then you have maximum exit. That is what we're doing all around the world. And then Adam and I, of course, have our own deals. We're purchasing an accounting company, bookkeeping, home services, all these other industries. Ultimately, we've revolutionized that system and understanding. But the most important thing for even those who are thinking of doing this, and we'll show you how we do what we do. Maybe we participate, maybe you do it yourself, is this. You're not investing in the company, you're really investing in the people. And the people are far more important because a great company can be ruined by a shitty person who basically is hard to deal with, who's too in love with his company, who argues with this, and it's just not worth it. Life is too short. And then you could have someone that says, you know what? They're amazing people. They just haven't run their business yet at the level they have. Maybe because they don't have the infrastructures. They don't know how to scale. They didn't have the proper accounting. And they're just good at doing what they're doing. So take one of our buddies in the roofing industry. You're really good at going out there and being on the job site, managing people, not good at the back office, not good at getting clients, but you're really good at delivering service because it's hard to be good at everything. And often, let's say roofers are good at roofing, but they're not good at the business part. And then also too, you can be great at business, but if you don't provide a quality service, you won't last long in business as well. And this is the skill set that we bring, a dream team of you and us together, but you got to have the right people. Adam, at the end of the day, there's a lot of nightmare situations where you get involved in deals. The owners are in love. I was just saying, why don't we open up the blinds? I was just about to say that, brother.
Hey, it's rare that there's sunlight when you and I are talking. That's
well, it's
pretty
not
good.
sunlight yet. It's coming out. I can see
Yeah,
it.
almost.
It's coming out. But Adam, comment on what I just said.
So listen, a lot of entrepreneurs, so again, I was doing roll-ups on a big scale, big stage for Wall Street. Now we're doing it with Main Street because it also works for small businesses too. It's just a smaller scale. And a lot of small business owners don't have the skill set to find good companies, to finance good companies, to put all of that stuff together, to get them integrated, and it takes a team of people and it takes experience, to do that. But people do it every day and they stumble through it. A lot of entrepreneurs think that the hardest thing to do is to finance a deal. And I'll tell you that the hardest thing to do is find good people and to find good companies. So there's a ton of companies out there. Just because there's one available and it's for sale doesn't mean we should buy it. We need to buy good companies run by good people because it's complex enough when you're doing a buy and build to put multiple companies together and get all these former owners to sing kumbaya around the fire if they're staying, and or to create an integrated empire. takes a lot of work and a lot of effort. And so if you get the wrong personalities at the table, the deal's dead. At the end of the day, it's people that make businesses breathe, and it's people that have to do business, get along, and work together towards a common goal. So people is the most important element to finding the good companies, the ones that are truly worth buying, paying fair market value for. That's the second, piece of this. And the easiest piece is financing. Just going out and finding capital. Capital's everywhere. We just have to know how to treat it, and if we know how to treat it, we can get capital for our deals.
It is a problem that we have. We have too much capital looking for great people. And hopefully you're enjoying this. So Adam and I do this really early in the morning before insane days start. It takes 2 seconds to like and subscribe if you're watching on YouTube, and comments in there. If you're watching on Spotify or Apple, liking it, putting a review. It takes 2 seconds. It helps the algorithm. It helps spread the word. And also, if you want us involved in your life or your company, and you want to do stuff with us, or you just want to learn scaling fast, exit wealthy when you want to exit wealthy, these are things that we want to do with you together. The link is in the chat for that as well. You can also send me a DM on Instagram. I do check all my own my stuff, and this is how it's done. And then someone sent me a deal yesterday to do $38 million, $28 million a year in plumbing, do about $7 million in EBITDA and profits.
I'm excited to talk to this guy, JT.
Yeah,
he is obviously very good at building his organically grown plumbing business, but I saw some of the traffic, and I know that he doesn't have the skill and expertise in terms of doing the deal side, of the business.
You can't be good at all. Like the amount of time it takes to be in deal, just like to run. Here's the thing too: we only have so many days in our lives, right? And you can master your business, and you get very good, but then master the art of buying other businesses, synergizing together. We'll talk about on the next show what's called the synergy. Who are the players you need if you're going to go buy other companies as well? What you need to do, because this show's about giving value. So I want to appreciate everyone here who supports the show from Adam and I. Follow Adam on LinkedIn, and follow me on Instagram and as well LinkedIn. But I respond more to Instagram. Adam responds more to LinkedIn as well. It's okay. We're there. We're here for everybody. Appreciate the support as well. Thank you so much. Next episode is going to be a very good one. What do we need when we buy something? What are the tools that we need to go acquire other companies, whether for yourself, your own company, you want to acquire a couple other plumbing companies because you want to roll it up into a master, or you want to be a deal maker. And again, even if you're not ready at the stages yet of buying other company, you need to learn the information, right? And so that where you are now, it's where you're going to be. Famous quote by Wayne Gretzky, who I had at my event, right? It's not where the puck is, it's where the puck is, where it's going to go. And that's where we're going, where it's going to go. But the difference is we want you there with us. Thank you, everyone. We'll see everybody on the next show. Adam, thank you so much. Appreciate you, all of you. Make sure to follow, like, subscribe, do all these amazing things for us. We'll see you in the link below.